going through your numbers, and this time yet again you've posted a profit compared to a loss same time last year. And just take us through how the quarter has been in terms of net subscriber addition, as well as what the way forward will look like.
Right. Yeah, we had a pretty strong quarter. We added about 390,000 net subscribers as compared to about 404,000 in the previous quarter. But as you know, in the previous quarter, we also had the additional boost from the Cricket World Cup. As far as the other numbers are concerned, the subscription revenue grew sequentially about 3.6% Q on Q. We had slightly lower carriage income during the quarter because of the expiry of some deals which have not yet been refilled. And therefore the overall top line Q on Q was slightly lower than the subscription revenue growth. But having said that, the subscription revenue growth was the key parameter that we monitor, so that we're quite happy about that momentum. On a YOY basis, that number is almost about 19.6% in terms of subscription revenue and also in terms of total revenue growth.
Mr. Venkatesh, good afternoon. And that's what the street wants to know, if this kind of double-digit revenue growth is sustainable.
Absolutely, why not? I think we have guided for full year subscriber addition of 1.5 to 1.7 million. And traditionally, the first 2 quarters of the year are the weaker quarters. And we've already added about close to 400,000 in the first quarter, so there's no reason why we shouldn't be able to meet our guidance of 1.5 to 1.7. And we've also guided for about a 6 to 7% ARPU growth, which I think we are quite confident that we should be able to deliver that. So these sort of growths in the high teens is certainly something we expect we should be able to comfortably able to deliver.
Okay. This quarter, your margins on a sequential basis have seen an improvement. So last quarter you did 29.4 and this quarter it's 32.2% margins. Will this trend of improving margins continue? And by the end of FY16, what kind of a margin would you be comfortable with?
We don't specifically guide on margins, but we have guided on inflation of key middle line items like content cost. For example, we have guided that it will be in mid-single digits. Currently, for this quarter, it's around 5%, so we are quite confident of achieving our mid-single digit guidance on content costs. As far as some of the other line items like sales and distribution, marketing expenses, they tend to be a bit lumpy. For example, we had higher ATL and BTL spends during the World Cup in Q4. And that number, corresponding number, was lower in Q1 because we didn't spend that much in marketing and below the line activities. But then again, that will probably pick up in Q3 with the festive season and also in Q2 where we have a new launch plan. Overall, we do expect margins to stay at these levels or improve a bit. Certainly, I think this can be seen as some sort of a base for the margins.
Okay. Mr. Venkatesh, if you could tell us, if you could break up this ARPU increase that you spoke about, how much of it was because of increase in your subscription fees, how much was because of the HD conversion, how much because of number of boxes added, if you could break this up for us.
Well, it's overall a mix. I do not have the granular details right now to be able to share with you. But certainly it's being driven by increasing uptake of HD as well as the overall growth in the business. Of course, along with the top line growth, if your total subscriber numbers also grow, so the denominator also increases. So basically the trick is to keep the numerator going faster than the denominator. But having said that, we have guided for a 6 to 7% increase in ARPU YOY, and we're quite comfortable of being able to achieve that.
Okay, I just have a small follow-up to that then. In terms of subscribers added, how would you compare to say something like a Tata Sky, and in terms of the incremental market share, what's the status on that?
In terms of subscriber tariffs, we are selling today at a small premium over most of the DTH operators because we have implemented differential pricing in the urban markets. As far as the incremental market share is concerned, we had incremental market share in the last quarter of about 27%. As far as the individual details of the other operators are concerned, I wouldn't be able to share that with you on this interaction.
Did you take any price hikes in the quarter gone by, and did that help you in your margin growth?
We had taken a price hike, and part of that filtered through in this quarter. We had taken it towards the end of the previous quarter, and not all of that was captured. Certainly, that has also been a factor in improving our margins.
And what was the quantum of that, and will there be any more in this quarter?
It was about a 4 to 6% increase in February, and then yes, we are planning to take the price up again in this quarter.
Okay, some more price hikes. You were just briefly mentioning that in this quarter you have a new launch coming up. What launch is that? Can you throw more color on that?
Unfortunately, I won't be able to share that details with you right now, but it will be known quite soon.
In terms of this price hike that you're talking about, if you could give us some ballpark, and in terms of price elasticity and the kind of competitive intensity that we have now in this space, do you think it will be taken well by the market?
Yeah, we are looking at a similar 3 to 5% increase in this quarter. As far as overall, the trend that we've seen is the entire market needs to and wants to also move the bar on pricing. So we don't see that as an issue. Typically, we've seen that whenever we take the price up with a lag of 3 to 5 weeks, the rest of the players also do that. And even the cable system is also under a lot of pressure, especially from the content owners to also increase the ARPU. So I think the overall ecosystem is working towards higher prices, so we don't foresee that to be an issue.
Yes, in fact, despite Q1 being traditionally weak, you've managed to see ARPUs of 180. So that's something that's higher than what you did last quarter. So that's a good trend to maintain. You said about 6 to 7% increase in ARPUs. I reckon that's for the full year. For the next couple of quarters, for the next quarter, what would the average ARPUs be, you think?
Well, we don't guide on a quarter-by-quarter basis, but typically, as I mentioned, if we are taking some sort of a price increase in this quarter, part of that will reflect here. And Q3 tends to be the best quarter for DTH companies with the festive season and Diwali and Puja and all of that. So the full impact of all of this will actually be visible in Q3, but you will get some of that in Q2 as well.
What about Zing? How has the performance been there?
Zing has been performing exceedingly well. In fact, we will be rolling it out to some couple of other geographies also during this quarter. Okay. And it is like we are spread with our product portfolio, we're actually straddling the entire spectrum. So to some extent, you have Zing, which has a lower ARPU as compared to the normal dish product, and then you have HD, which has the higher ARPU. So in that sense, while it's driving the volumes quite aggressively, it tends to balance out some of the higher end gains that we get from HD in terms of the ARPU drive. But overall, ultimately, it's accretive to the business, and that's really what matters.
All right, we leave it at that. Thanks for joining us and taking us through the numbers. All the best for the quarters to come. So that's an in-line set of numbers, a decent set of numbers that Dish TV has announced this time around. Income growth of 19%. Profits have improved sequentially at 54 crores versus about 35 crores. So they're getting better quarter after quarter. But the stock has been
I think the market was spoiled by last quarter.
Yes, it was,
and the kind of re-rating that took place. But last quarter was unexpected. It really came out of nowhere.
Clearly.
So this time around, the expectations obviously went up.
And also, I guess, with a stock like Dish TV and many of these mid-cap stocks, if you're getting profits, such good profits, you might as well take some off the table, right?
Yes, indeed. But it's, from last quarter, the stock was at 80. It had a decent re-rating, right? 80,
yes.
80, 80.